Tuesday, December 2nd, market analysis, Stan Ehrlich. Good afternoon. Almost 2 o'clock California time. I start out with stock market indexes, always last 3 years, and go to futures and a few stocks, which rotate around occasionally. Now, I still think we have the last shoulder high being made in the last 3 days, Friday, yesterday, Monday, today, Tuesday, for the stock market indexes at these levels. I'm aware the market went up a little bit today, a point or two, give or take a little, nothing major. I didn't want to go up at all. The Qs actually did make slightly higher highs than the last Friday and yesterday, QQQ and the NQ, but the spiders did not. Dow, no. Russell, no. So they're still in the right time frame. Oh, maybe a few days later than I would have expected, and about the right price range. All I have to have is the beginning of a down move. We know it's not going to go sideways for very long. That's a given. And you don't really see it's not apparent that it's actually going to start to go down, but that's my expectation. If we start to close higher than today's highs or higher than last Friday, yesterday, and today, and the spiders, for example, Russell, Dow, then I'm going to be wrong and start to shift my opinion and change my mind and not talk about a head and shoulder top anymore. Something else might develop. Of course, sooner or later it will. So here we are. The last 3, 4, 5 days with the rally highs on the spider MES micro about the same levels. And it might be a few days later than one might expect timing wise, but the first shoulder on the left has a bearish engulfing ER sell signal. The top of the market to the exact day has an ER sell signal. That's why it's red. The body and the wicks are red. They're sell signals. Or yellow only means overbought or oversold. In my custom relative strength index at the bottom, and I learned RSI from Wells himself, Wells Walter. So that's a warning, just like a traffic light. And if you see green, like back here, it's a buy signal. I don't know why I don't have a green circle around it. They should. So the 1 minute chart topped out, kind of looks like a broadening pattern. Couldn't make any downside headway. Couldn't make any upside headway. We'll see what happens. Spider, head and shoulder top, neckline drawn in, downside objective approximately 612 and a half or lower. I said minimum downside objective. Head and shoulder tops and bottoms oftentimes go much farther than the classical measured expectation objective. And sometimes they don't work at all. So you have to know what to look for one way or the other. So far, this is okay. Next, we got the 1 minute spider going flat. Obviously, I want to see it close below 678.65 ASAP. Next, Qs. Today, the QQQ did make a higher high than last Friday and yesterday, and it closed on a firm note. Not super strong, but, up a decent amount. It does have that gap to close at higher levels. I keep mentioning that off and on. Now we're getting very close. I did not expect it to get closed because it was in a good spot for what we call a downside breakaway gap off the head of the formation. So this is now becoming skeptical, the Qs. And of course, I don't like that. But if it immediately starts to head south, I'll accept the slightly higher high as still part of the shoulder building process. Next, the 1 minute chart popped up, settled back down into support last, several hours, day or two of trading range, and then started to try and make new highs at the end of the day. And MNQ, same thing, of course. If the head and shoulder tops start to work, meaning we start to close lower with reversals, etc., in the next few days, and that's all it's going to take to prove it right or wrong, probably. Then I'm going to start to talk about some other details involved as to how it should evolve. Next, 1 minute, M and Q. Russell, I'm sorry, the Dow, YM, no higher high. Still Friday was the top. Close, but no new high on yesterday's market. And today we bounced back a little bit, closing below today's lows. ASAP would make this look pretty good. Russell, I'm sorry, the 1 minute YM. Russell, not the same animal, not the same formation, just a huge sideways trading range I've been talking about for months and months and right on the money. Topped out of resistance, did it a second time, formed a small double top, put the downside objective on the chart for you guys, and it came down right to it while I was out of town. Well, no, I left on that Friday, which was a lower low by a small amount and still at the support level, give or take a little, but having fulfilled the downside objective almost perfectly, hey, it bounced right back up a chunk, and now we're still locked in the middle sideways trading range. And here's the 1 minute chart of the Russell. So I think it's going to turn down soon. Uh, Bonds. Also, how about that? Have a head and shoulder top formation that is working very well, very accurately, starting really on last Friday's bearish engulfing. Dropped like a rock yesterday on Monday. Today, Tuesday, went down some more earlier and came back to close around unchanged. Bounced off the neckline. We need to close below today's low, which will be below the neckline. The bigger the break, faster, higher volume, etc., the more classical. And it's supposed to go down if we get a breakout, and I do expect that probably in the next few days. Minimum downside objective 112.09, which is again in a very broad area of support where it's been bottoming out April, May, June, July, August. Notes, same pattern. We got a double self signal during the first shoulder on the left, first 2 weeks of September. Unfortunately, no sell signal on the exact high, but overbought at the top of the formation and overbought condition again on the last shoulder high. We tested the neckline today. No, sorry, that's an old bull trend line we tested today, which is support and bounced off of it so-so. But the real line is right here, and that one is the neckline. If broken on a closing basis, should predict it'll move down to 110.12. Okay, crude. Little lower close, slowly coming down, zigzag slow, and I expect lows to be challenged and maybe even down to as low as 52 to 50. Next, natural gas, new high, firm close, last couple of days, looking good, but close to overbought. Implication, it might settle back to support again. That would be about a third time then, at about 4.413-ish. I should probably pull these to the right a little bit more now. Okay, good. Next, we've got heating oil with almost a new low close, maybe by a tick or two for the move down. Not quite a lower low, but this oftentimes does precede that by a day or less. Now, looking for this old bear trend line to be tested from the top side again. Back here, the original breakout tested it a couple times, and then up to extreme overbought conditions, up to middle 80s, and topped out. So is the major long-term trend changed? Can't really tell. I don't think so. I think somewhere between where we are here and maybe as low as 212, 30-ish, we may bottom out again. Next, gold, overbought yesterday. And right around the previous rally highs, which it got above, and that was the rally high that was on 1113, but couldn't keep it, closed below it in overbought conditions, dropped down pretty good today. So I wouldn't be surprised if it came all the way back to 39.69. Next, silver, Very overbought yesterday. I'm almost screaming bloody murder when I get to 90. I start saying, it's going to break in any moment, any hour, and certainly within a day or two. But that's not quite at 90. It's at 87, 88. Boy, that's close enough almost, huh? And it went sideways today. Still overbought. No upside progress, no downside progress. Doji, inside day, uncertainty. Next, I think it's topping out, of course. Platinum did top out, broke down pretty good, lower closed, was overbought, back up toward those previous highs, as I mentioned yesterday. Looking for a move, probably back down to 1490 to 1550. Yeah, somewhere in there. Next, copper hit for the third time almost the exact same prices since the first time was October 9th. Then it did it again a little bit higher on October 29 and did it again yesterday. Obvious resistance areas working. So why wouldn't it come back down again to, I don't know, 5.6, 5.06, 5.00? Yeah. Next. Soybeans, I did not want to find this, but I couldn't ignore the obvious as of today. The soybeans do seem to be forming a potential head and shoulder top, and then I've got some bearish things to say about the other grains on an intermediate, short-term to intermediate basis. I'm still very bullish long-term. So yesterday we had a bearish engulfing. It wasn't red because it wasn't overbought, but that's the last shoulder high. Boom. Down a bit more today, getting close to the neckline, which is fairly upward slanted, not unusually. The shoulders are about the same levels. That's normal, decent, typical as hell. I did get a bearish engulfing sell signal, which didn't work, but these signals are sometimes, as I've said many, many times, part of the topping out or bottoming out process, not necessarily the low day like we got with green on October 1st, and almost the low day that we got on August 11th, and way back here also last year, August 26th. Too bad nothing here and nothing here. So I could be bearish easily to go down and do what? Close a gap. Isn't that lovely? The gap's going to get closed with a downside objective that matches the gap closure price level and turn around and go right back up again and be in oversold condition when it gets down there, probably. And that's my story, and I'm going to stick to it until proven otherwise. So I like very much what I see here. I just didn't want to be quite this bearish, but it doesn't ruin the long-term bullish. Next is soybean oil, not quite the same. Maybe we've got a little double top. We're close to being overbought the second time. It topped out with these RSI conditions, and here we are with almost the exact same price and the exact same RSI conditions. So I wouldn't be surprised to see it pull back, and soybean meal has already broken out of a head and shoulder top yesterday. As I said, classic downside breakout, big move, new lows for several days, if not weeks or more. And today it just had really good downside follow through. So we are already probably a little over a third the way down to the minimum objective, which would be 299.9. Call it obviously 300. And that is support at the same time. So what, a week or two or three? And then up again big time. Corn, having trouble here. Now, I can see that this red bearish signal, which didn't work very well, but it's still a high for a little bit of time, could be construed as a shoulder. But you've got some problems drawing the neckline in properly, and this is not quite what I would like to call a head and shoulder top. But you do have a high in the middle of these three highs, and that was one of them today. But it is an outside up day. Now, I don't think that's a bass-backwards reversal because we're not in overbought conditions. Otherwise, I would say that. This is normally bullish, and I think it is. So I'm looking for the high of the rallies to be tested. 456, broken and move up further. I still like the longer-term head and shoulder bottom of the shoulders in July, the head of the formations in August, and the last little double shoulder, which makes it a little lopsided, is around early October. So That upside objective is in the ballpark of 483. I still think that's good. Now, we did dip below the neckline for a couple of 4 days, but it resolved its problems, and we're creating another new high close today. Next, wheat, bullish engulfing, bounced off support. Unfortunately, not oversold, otherwise it would turn green. But I like what I see. I'm going to call this the same thing I'm calling corn. It's looking friendly because of the support that held, bullish engulfing, and I think it's at least going to go up and challenge the 565 ballpark. Next, we've got Apple Computer. Overbought second day in a row. This is cruising for bruising, and I wouldn't buy it here. I would be looking for sell signals. Minimum downside, and I think it's going to be more than that, is 276, probably down to close an old gap here at 264. And don't rule out at all 262, 50, 52, 252 because of an old gap as well. Now, the ultimate downside, I don't think we're going to get too much lower than 240, but that's 60, 47, about $50 lower. Next, Tesla already had a bit of a downside breakout, came back up testing this previous bottoms, a lot of them in that trading range from early September to early November, well, middle of November. So here we have a bearish engulfing, closed slightly lower, but it was an outside down day. That again frequently starts moves down, looking for lower levels. I expect to see 370-ish, and I'm not ruling out a gap closure way down at 338. Next, NVIDIA. Bounced up to a little resistance, fell back slightly, closed slightly higher, no big deal. Still looking for lower levels. There are some ancient gaps way back in June I forgot about. Not too important at the moment. I expect to see 164.40 at least. And if that's broken, we'll talk some more about lower prices. Probably the same thing here. Now, yesterday we did have a bullish engulfing, and today we did make it higher than yesterday's high. But the close is terrible, and it's very close to yesterday's low. And that would, if we get below yesterday's low, cancel the buy signal completely. It was a bad one, unless you're scalping overnight or something, and you don't scalp overnight. Scalp is a day trade. So no, I'll pass on this one. I'll leave it alone for another day. And we're back to the mini. You guys have a great day and profitable trading to you.